Welcome guys to the second video of the box system. In this one, we are going to discuss the trend structure. So in the last video, we learned how to make boxes with the help of zones and to define when the market is consolidating versus when it's trending. So S&P 500 consolidated for a period of almost 12 years before it finally broke out and gave us the bull market that the markets have enjoyed for the last for a decade or so. Once we had this consolidation, you see price broke out and you can see with time, there's a clear directional move. It's up. All right. Look at that in contrast to the consolidation phase. Now these moves up is when you want to participate in the markets because that's where the money is made. Now what we are going to understand is if there's any rhyme or reason for this move up, if there is a logical structure to it. Now, in this move up, you can see there are still some periods of consolidation, not as big as the 12-year period we had, but you can see something here. I didn't draw these boxes before. I wanted to do it in front of you guys so I can explain while I'm drawing them. But you can see there's a sideways period of consolidation here. Now that's a box on a smaller time frame. It's a similar box to this on a smaller time frame. On a monthly time frame, it looks as part of the trend up. But one thing you should know that even in a trend up, you have these periods where you have sideways movement to gather energy for continuation. All right, there's another one here. This is not as clean as the last one. And the reason for that is, well, you all know COVID. COVID was not a market event, all right? It's not something that could have been predicted. It was something that came out of the blue, which is why it's not as clean as regular structure. But overall, you can see there was a period of sideways consolidation. Once this period of sideways consolidation happened, we tried to break out before COVID actually happened. And then COVID kind of brought us in the consolidation again for another attempt at breaking out. Okay. If price had just broken out here directly, that would have been a lot cleaner, but this could not have been predicted. So we came back in consolidation. All right. So now that I've drawn out these boxes, one thing I want to show what's going on here. Once we broke out of this trend, what do we see? We saw price rise, make a high, all right, and then pull back to make a low. This thing is called a higher high because it's higher than where price was previously consolidating. All right. This thing is called a higher low because it's higher than the previous lows that price had. What is a high and a low? A high and a low is just the maximum price in a local range. So for example, in this range, this is a high right here, 136, and this is a low, 110. You can see price went to this low and then went again high. In this area, 142 is a high. In this area, 125 is a low. All right. I hope you guys are getting an idea of what a high and low means. It just means where price, the highest point price went to in a local area and the lowest price went to in a local area. So once we broke out of this major consolidation, we make a high here, we pull back, make a low. All right. Now this low is higher than the previous low price had made. All right, this high is higher than the previous high price had made, which is why it's called an uptrend. You have higher highs and higher lows. After this consolidation, price went up again, made a high, then pulled back to make a low. Higher high, higher low. Okay, I hope you guys are getting the picture. This is what I mean by a trend. Price makes higher highs and higher lows. In this area, this is a high, this is a low. Price went back up but did not make a higher high. Okay, it made a lower low here. This is consolidation. There's no trend structure. There's no higher highs and higher lows. That's for an uptrend. On the downtrend, just reverse the whole thing. So once we get a breakout, we have a sequence of two higher highs and higher lows. And then usually we simply move into another period of consolidation. In some cases, we have this major final phase called the parabolic phase, which is what we saw here with S&P 500 after COVID. You had this major bust and it's called the blow off top of a trend. All right. So let's summarize it all. What is the trend structure? A trend structure involves a breakout from a consolidation, makes two higher highs and higher lows. Then 20% of the times it might have a blow off phase where price simply rises parabolically. And after that, we enter another period of consolidation to make another box to have energy for another move. Now, that's the overall trend structure. What can we expect once price leaves the box? Well, when price leaves the box, there are three different ways it does it. All right. Sometimes it just goes, right? Like in this case, once price left the box, it just went. There was no retest of this box boundary or an incursion inside the box again. All right. Sometimes it just goes. Then other times there are second case where price breaks out, comes back, retests the box boundary, which happens in this case. You see, price broke out, came back, retested the box boundary around June to 2013, and then it took off. All right, so that's the second case. Case one, it just takes off. Case two, it retests the top of the box and then it takes off. The third one is where price makes a small incursion inside the box. All right, so it comes back to the first zone inside the box. Now in this case, it does that. So the first zone inside this box would be around here. That's the previous low. All right, around this. You can see price consolidated above this zone and below the top of the box boundary for a while before it broke down. So you can see how that is the first zone inside the box. I will make it more clear, something like this. Now, sometimes price before a breakout will come back inside the box, but as long as it's above this first zone, it can still make a higher low, which means it can still be in the trend, which means that's still a valid trend. Okay, what does that mean? In all these three cases, price, if a new trend has started, should never go below the first zone inside the box. So what is the logical stop loss if one was to enter a trend on a breakout? It should be below the first zone inside the box, because in all three cases, price should have never gone below the first zone inside the box. It can either go directly up, it can retest the box boundary, or it can retest the first zone inside the box and then take off, right? And still make a higher low. But in no circumstance should it go below the first zone inside the box. And that allows you to know your entry as well as your initial stop. How you move that stop depends on your objectives. It has a lot of different factors. But for now, I'll give you your initial stop and I gave you your entry. All right, so quickly summarizing what we have discussed in this video is what a trend structure is. Once we break out, we get a sequence of two higher highs and higher lows, and then 20% of the cases, we get a blow off top. We discussed the three different ways in which price leaves a consolidation, leaves a box, and we discussed where the initial stop can be. Last thing I want to discuss is what kind of markets trend versus which ones don't. Markets that have, growth industries, tech industries, markets that have a lot of potential trend, Dividend stocks do not trend. Forex does not trend. Why? Because both of those markets value stability. A dividend company is not trying to double, triple its market cap. What it's trying to do is stabilize its stock price and give some dividends to its stockholders. They're giving out dividends because they know there's not that much growth potential anyways. So those stocks won't trend. Forex, why does it not trend? It does not trend because the biggest participants, which are the governments, are not interested in Forex to make profits. They want to stabilize their currency. And that's why Forex does not trend well. Which markets do trend? Commodities, oil, gold, they all trend. Growth stocks, Apple, Amazon, Roku, Zoom, all of these, they trend. All right. So you have to know what your market you're trading in order to know what system you will use. For markets that don't trend, simply use zone to zone. So zone to zone trading works well for Forex, works well for dividend stocks. For markets that do trend, you want to capture a trend to make the biggest bang for your buck. All right, guys, that's it for understanding the trend structure. In the next video, we are going to discuss the different types of boxes.